Yeah, Treasury is a natural source of information for the business. We're interacting with the markets every day. We have economics ideas every day. We're doing real interactions. And so, what a lot of Treasury groups don't do is figure out a way to translate that into other uses for the business and leverage that information. And so economists, I think, are sort of naturally trained to try to synthesize the information, forecast that information, and just try to package it up in a way that is useful to the broader business. So it's partly like a translator function and partly taking something that we already are doing, which is doing a lot of trades in the world and analyzing a lot of business situations and making it into real business information that we can use in other parts of the business. I think Treasury is just a natural fulcrum for that. So I think the best way to summarize it is just through better capital allocation, right? So what economists do, or we do, at least in our group, is look at all the data in the market, whether it's economic data or other data, turn it into, in effect, summary measures of what's going on in a market, and then use that in a very rigorous, routine way to inform capital allocation decisions. So for example, figuring out what the right discount rate is for any particular project or an investment, looking at those investments the way we would look at any other investment that we make, which is through the lens of risk, through the lens of potential returns, and then being able to allocate or help the businesses and the CFO allocate capital across those opportunities. I think that's where economists can really add a lot of value, and I think having them in Treasury or working with the Treasury team at a minimum makes a lot of sense given what we see in the market. The major risks, well, so I don't know how to call some of them major. There's a lot of risk. Any big business faces myriad risks around the world. Some of it's regionally oriented, so we look at specific countries that we want to keep an eye on, and we routinely issue reports on those countries. I think the broadest risk that we face is just missing some underlying big development, whether it's things we look at are government finances, major movers or factors in the world economy. So if it's oil prices or if it's interest rates or currency movements, not looking at those things in a very systematic way is a big risk to your business, right? You need to understand what you're getting yourself into, region by region. You need to understand what kinds of volatility you'll be facing around the world, and that's what we try to do. So it's less about the specific risks that I sit around where you always worry about things like cybersecurity and everything else, but I worry more about the risk that we're just going to miss something, and I think that's why you need a systematic way to be following the world in a sort of economic framework that we follow.